Wall Street, top investors watching your money this week. Joining me right now is Bulltick Capital Markets Head of Global Research, Catherine Rooney-Vera, Morgan Stanley's Private Wealth Management Senior Vice President and Portfolio Manager, Caterina Simonetti, and Kingsview Wealth Management Chief Investment Officer and Fox News contributor, Scott Martin. Great to see everybody this morning. Thank you so much for joining us. First up, Scott, let's talk about all these deals. Dunkin' Brands reportedly in talks to go private with Inspire Brands, that's owner of Arby's and Buffalo Wild Wings. As you see, Dunkin' shares right now are up 17% on the story. Then energy companies Synovus and Husky agreed to merge in an all-stock deal valued at $2.9 billion. A little bit of a deal Monday. Is this going to spark further deals? What's the impact?
Well, on the Dunkin' side, Maria, pretty inspirational deal, I guess, to use a pun if you're a holder of Dunkin'. But if you think about these deals that are out there, especially on the Husky side with the energy you mentioned there, there's reasons that these deals are being done. In the case of Dunkin', for example, I mean, they've kind of carved out this blue-collar, everyday man and woman coffee company and donut company, certainly, too. And so they've got a place in American society that I think Inspire Brands wants to take advantage of. You know, it's not like the Starbucks, which makes me wonder why I've been drinking and investing in Starbucks all these years instead of Dunkin', where you've got the double poof venti macchiatos out there when you have Dunkin' that has a place in everyday life. So to me, I think when you look at the Dunkin' deal and you look at the Husky deal, you're looking at companies that are starting to gain real market share, real brand recognition, and I think more of this is likely to come, especially as we come out of the coronavirus pandemic.
All right, we'll see. We definitely are looking at the Dunkin' story, seeing a real impact on the shares today, that it may go private in this deal. Catherine, let's talk about the strength of the consumer. The consumer holding up incredibly well, even in the face of this uncertainty around stimulus, even in the face of the contraction that we saw in the second quarter. We will get the GDP number out this week. We will get also more news looking at the consumer. What's the investment play around a consumer that has really stayed strong despite this shutdown?
If you're bullish on the U.S. economy and the consumer, Maria, I think that an investor should look at the airlines. They've been decimated and they've still remained at very low rates, prices 40% low, still down since the peak a few months ago. So I would look at the airlines. But I'll tell you what, Maria, I think that government transfer payments have propped up the consumer to a large extent. And this is a worrisome trend in recent years. My concern is that fiscal stimulus as a result of COVID doesn't get retraced once we see a more fundamentally based economy. Rather, it becomes massive social spending. And if that's the case, Maria, then today investors should be looking at the purchase of TIPS, inflation-protected instruments, and gold as well. So right now, if we get one other thing, Maria, is if we get a blue sweep and the market drops, regardless of actually why the market drops, if it's electorally driven, I think we should be buying the market because you have fiscal stimulus in the pipeline, you have monetary stimulus in the pipeline. So if the market retraces, buy the broad market, buy the airlines, you can buy industrials and materials, but juxtapose that, Maria, with TIPS and with gold. Protect yourself against the inflation risk in coming years.
All right, great analysis there. We'll watch to see if we get a sell-off that creates a buying opportunity. Katerina, let's turn to investing around COVID-19 and the shutdown. Investors have seen these stay-at-home stocks soar, like Zoom. Look at the Zoom market value. It's incredible. Now we have a second wave of COVID coming. Europe has increased the lockdowns, talking about 80,000 plus cases in a day alone in the U.S. on Saturday. What impact will this have on the market, and would you recommend buying what has worked during this pandemic?
Maria, excellent point. We are actually advocating that investors should pivot and take a look at the sectors that did not quite had that much of an uptick over the last end of the summer rally. Sectors like mid-cap, small-cap, international. Specifically, there are a number of parts of the market, to Catherine's point, like consumer cyclicals and materials and services, sectors that are fueled by the rising inflation. And we think there is a lot of potential opportunity there, despite of the market volatility that we expect because of all the things that are happening in the market, the election, the lack of the fiscal stimulus deal, and of course the fears over COVID, which is the most important thing. So the answer is we think that there are other sectors other than big tech to focus on.
So, Katerina, would you be taking money out of stocks like Amazon and putting it into some of these small caps and mid caps that have not done as well?
This is a great time, where appropriate, to rebalance portfolios. So this is definitely the time to sit down and take a look at the basis and the makeup of the portfolios, and where there is an overweight in technology, we certainly recommend rebalancing. Absolutely.
Okay. We will leave it there. Great to see you this morning. Thank you so much, Catherine Rune-Vera, Scott Martin, and Katerina Simonetti. Great word on Wall Street, guys. We'll be right back.